Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we're looking for an impulsive structure to the upside where wave 5 preferably ends above the 67.2k highs, as on the higher time frame we are then looking for a wave C to the upside in a bigger flat A, B, C, where for an expanding flat structure you want wave C to move above the highs of wave A, which is at 67.2k. One of the targets for a wave 5 is the 0.618 trend-based subextension from the low of 1 to the high of 3 to the low of 4, which is sitting above the high, so that is nice, at 67.7k. In this scenario, your wave 4 might be finished here with a 3-wave A, a 3-wave B and a 5-wave C, now looking for price to move towards the upside. So on the 15-minute time frame, we are looking for impulsive structures with a finished wave 1, a finished wave 2 in this case, retracing to the 0.786, taken from the low to the high of this wave 1, which is a common target for a wave 2. Then you're looking for continuation to the upside where the resistance that we have above price should not really be a big problem. First area of resistance is this blue box, 64k to 64.1k, and then we have the low of a 1 hour gap over here. The moment we start to close 1 hour candles inside this gap, it increases the probabilities to fill the gap to the upside, which in turn increases the probabilities to take the high. If we then zoom out once again, a second bullish scenario here is that we already have a finished wave 1 structure. So we have an impulse to the upside in a 1, 2, 3, 4, 5. That then means that the blue wave 1 is finished and we are looking for a retracement to the downside in a wave 2. Common target area of your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of the blue wave 1, giving you a target area between a 61k and a 58.4k, with the 0.382 being an uncommon target at 62k. Inside this area, we do have a little bit of support. First of all, the daily naked point of control at 61,750. And then secondly, here at the golden pocket, we have the blue box 59.4k to 60k. In this scenario, after wave 2, we then want to see price moving impulsively to the upside in a wave 3, looking for the highs. Now more locally, as we are then looking for wave 2 to the downside, preferably at least hitting this box over here, we're looking for a corrective structure, and in this case, we're then looking to start a move to the downside with a zigzag in a 5-wave move to the downside in a wave A, looking for a 3-wave structure to the upside in a wave B, and then a 5-wave impulsive move to the downside in a wave C. Common target area for your wave B is the 382 to the 886 Fibonacci, taken from the high to the low of this wave A, giving you a target area between a 63.7k and 65.2k. Now in this scenario, of course, we already covered the resistance, and it is important that we can see some proof of resistance, because of course alternatively we have a 1, 2 and then a wave 3. So if volume is increasing and we get a big impulsive structure to the upside, we're gonna look for the highs. However, if price over here starts ranging and maybe changing market structure, some bearish CVDs, RSI, MACD, whatever bearish stuff you want to use, then we can look for a move towards the downside for that wave C towards the 2 support areas mentioned earlier. On the 4-hour time frame, the most bearish scenario is a bigger impulse to the downside, a finished wave 1 and 2 in red, and now looking for another 1, 2 in blue, before then a big move to the downside. The probabilities are impacted by the 886 and the vertical lines that you see on the chart. The 886 is a rare target for wave 2, taken from the high to the low of wave 1, decreasing the probabilities this high is a wave 2, increasing the probabilities that this high over here is a wave B or C, which therefore increases the probabilities that any of the price action coming after is corrective in a C or a Y or more complex structure, which in turn increases probabilities to sooner or later take the highs. Now secondly, this blue wave 1 here is longer in time compared to the red wave 1, even though the red count is a higher degree Elliott wave count, 1, 2, 3, 4, 5 in red, and then inside wave 3 a lower degree count being the blue one, 1, 2, 3, 4, 5, and preferably your blue 1 and your blue 2 are shorter in time and price compared to your red 1 and your red 2. It's not a hard invalidation, it's not a rule, it's more like a guideline, something that you want to see, but in this case your wave 1 is longer, the blue one, compared to the red one, as the blue wave 1 finished after the 1.618 fib time taken from the start to the end of this wave 1 to the end of this wave 2, comparing this red one with the blue wave 1. And if we do the same with regards to the wave 2s on the chart, then you can see this red vertical line with the 1 fib time taken from the low to the high of this wave 2 to the low of the blue wave 1, comparing the two wave 2s with one another. And in this wave 2 preferably you're looking for that expanding flat as well, 3, 3, and then a 5 wave structure to the upside to take the high of wave A. But you can see we are getting close to the 1-to-1 fib time, setting on Wednesday the 8th of May, 10 a.m. in the morning Central European time, and preferably you do not hit this line or make a new high after this vertical line over here. In general though, probabilities aren't very high because of the 886 touch and this second wave 1 here being longer in time. If we look at the CVD divergences, then we do have them on the chart here, a higher low in price, a lower low on the CVD, and also more locally, higher low in price, lower low on the CVD. On the CVD chart, it looks like this. If I zoom out on the 1 hour chart, you can see the yellow line, higher low in price, but look at the cursor line that I have on the chart, right? You can see that on the right side over here, the yellow line that below my horizontal cursor line, that is a bullish CVD divergence, higher low in price, but a lower low on the CVD. And on the 15-minute time frame, more locally, we also here have a higher low in price, but lower lows on the CVDs. Now the target for the big CVD divergence is price taking this high. The invalidation would be for price to take this low. Even if you could look for an ABC to the downside, this CVD divergence here is just going to move to the new low that is then going to be made. And the target of this CVD divergence here is the local high at about 64k. If we then look at the probabilities of the different scenarios, then on the 1 hour time frame, the probabilities are higher to sooner or later look for the highs to be taken over here, either in a wave 1, 2, 3, 4, and a 5 directly, or a bit of a deeper dip and then a move towards the upside to take the high. Short term, however, on the 15-minute time frame, the probabilities at the moment are higher to move towards the upside, take the local high here at about 64k and hit the local resistance. And then, because of the two scenarios, potentially an ABC to the downside or an impulse to the upside over here, right? We have to observe the reaction at resistance. If we get a straight line with volume to the upside, we're going to look for the highs. But if price is going to start ranging here for a little bit and then eventually create some bearish signs, we're going to look for price to move towards the downside in an ABC, aiming for support below and then looking for some proof of support over here to then look for price to move towards the upside and take the high. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.